Happy Friday. And today was an amazing day on the market. Not so much just stocks up 200 points, but a lot of things happened. Let me explain. First of all, Pfizer came out with a magic pill, I guess, that they've got about a 90% accuracy that it prevents death with COVID. So Merck came out with a similar kind of a situation a couple of weeks ago, and now Pfizer's up and Merck was down. But it sends a message that maybe the COVID period, the period where we're all at the mercy of this virus and what it does economically, maybe that time frame is behind us and the market starts looking for new leadership. So within the stock market, you had air pockets, literally stocks dropping 10, 20 points, 30 points. Good companies that have reported great earnings, but they're couch potato stocks, meaning that their business did very well when the country was shut in. So now we may be looking for new leadership, and money is shifting around within the stock market. But not just stocks. Bonds. 3 days ago, bond prices were through the floor, meaning interest rates were spiking higher. Yesterday, bond prices were through the roof, interest rates were spiking lower, and today interest rates dropped a whole bunch, and bonds technically are right at that technical point where maybe the bond market turns and interest rates go lower. But with the economy so strong, we had good job numbers today. Why are bonds going up? Maybe it's because the Federal Reserve is yet to fill 2 vacancies that exist, and Biden is yet to pick the successor or reappoint Powell. Lael Brainerd is the would-be successor, and she is a modern monetary theory advocate, meaning you print money, it doesn't matter, just keep printing it. Maybe it's time to go study the history books in Argentina and Brazil, but nevertheless, that's never worked for any society on earth, but that's the advocation. So we don't know whether the bonds are responding to her potential succession or whether they're responding to Powell. But there's another thing. The Baltic freight rate numbers are crashing, which means the cost to ship a container on a ship is really falling. And what does that mean? Well, maybe the supply chain backup that is bringing us this inflation is starting to break up. And that backup, we can see the end of that. If so, we can see much lower inflation, 1% to 2% lower, if we can get rid of the supply chain business. And maybe that's why bond interest rates are lower. We just can't tell. Then we look at our currency, and it should be up strongly with bonds being up so strongly, because as foreigners buy into U.S. Treasury obligations and put money into U.S. bond market, the currency has to go up because the currency translations are coming in. Well, the bond market opened higher, turned around, and closed lower. That's a one-day reversal, as technicians would say, and that's not a good sign for the dollar. So if the dollar's down, what happened to metals? Because all commodities are priced in dollars, and as the dollar weakens, then the price of commodities should go up, and gold is beginning to show a little strength. It is a hodgepodge of mixed numbers right now and a lot of emotions because the trading's very volatile. And at the base of this is the political system in the United States being in some sort of a deadlock. The Rules Committee moved out the bill, Biden's big bill for vote. Nancy Pelosi scheduled a vote for 8 this morning on the big bill, and guess what? No vote. It's been put off for another week. I don't know where that's going, but that is the bill that has all of the tax increases and all of that stuff that would affect interest rates, would affect profits, and all of this. So we've got emotions flying around, and we've got a smorgasbord of interesting asset plays. Bonds are different assets than stocks, and gold are different than both of those, and the dollar itself is an asset play unto itself. So things are a bit fouled up, but the stock market net is moving up. What are we doing about all of this? Well, we have cash to move to another asset category if we get the clear signal. We're close, we're right on it, but it hasn't broken yet. So what we're doing is we're trying to identify the soft spots in our portfolio, those couple of stocks that are just not behaving well, and maybe that their outlook is changing along with COVID's outlook, and that we're trying to prune that and adding exposure to small caps, which look very strong. A small company can morph itself, can change operationally to avoid regulations, to avoid attacks. A big company, AT&T, GE, you have it, can't do it. That's like moving a battleship. And so small companies should have an advantage, and money is starting to flow into small companies as we like it. And so we're adding there and trying to take out the weak stocks, and just waiting and watching and trying to figure out this rapid movement of interest rates, currencies, and everything else. It's a very difficult time, and I think the uncertainty all emanates from the uncertainty in Washington. You know, the president's on the ropes, and his program appears to be on the ropes too, and it's the one that's spending a lot of money, and it's the one that's got big tax increases in it, so everybody's watching it, and it's just not happening. Anyway, that's how the weekend appears to us. We're going to be doing a lot of reading, a lot of talking to people we know, and trying to figure out some of these movements. But it was a historic kind of a volatility in almost every sector. A very, very interesting combination. Have a good weekend. We'll talk soon. Bye.